Hello everyone, this is Rajendran from Market Calls and welcome everyone to weekend market commentary section. So where we discuss about Nifty and Bank Nifty trends, and we'll also look into the other market analysis, the intermarket analysis as well. So let's look into the Nifty futures hourly charts. So where you can find some interesting trade setups over here. So what is happening here is that the October 2018 month, the price got bottomed out, and then in fact the bottoming out after bottoming out, it created multiple higher lows continuously. So the marked reference lines are nothing but the higher lows. So it created a higher low here, one more higher low, and there is a huge it established one more higher low in December month, right? And again, so far one more higher low, so which is coming at a fair distance level. Now the thing here is that now the lows are getting crowded at this point of time. So one more low around 10,672 levels and another one at 10,720 levels, and now one more which happened last Friday around 10,760 levels. So 10,760 levels. So the lows are getting crowded as of now. On the upper side, the 11,000 levels has been acting like a kind of a resistance at this point of time. So we are in a expiry zone. So we have another 4 more trading days for expiry for the current January contract to expire. And so far for this series, not only this series, it has been in the October month, 11,000 has been defended. 11,000 has been defended in November month, it has been defended. December month, 11,000 has been defended. January 2019 as well, it has been defended. So that 11,000 levels has been defended almost closely multiple times at that level. Again, it's kind of a psychological reference as well. 11,000 is kind of an acting like a psychological resistance zone where, as I said, we are not the only one who is watching this level. Most of the traders watches this level. That is what makes the trading game complicated. So, but then what is happening here is that you could see some sort of a triangle pattern where the price is on the top. 11,000 is the cap, whereas it's continuously forming in higher highs. That means we are in a kind of a tightly packed sideways range with a low volatility, and of course volatility is likely to increase because we are approaching the Union Budget 2019 event, probably the start of the February series. We are going to start with the event, and that is what it's going to make even more complex. Next 4 trading days could be volatile, but still trading in a complete tight band between 10,750 to 11,000 levels, kind of a 250 point range. I don't think a serious breakout will be there unless that 10,750 levels are going to get broken on the downside, and most likely we are going to see a high volatile range so far. So it's so far it's an compressed markets. Though it is an earnings season, no much trendiness is seen so far. And on the upper side, we are having 11,000 as a resistance. When it comes to Bank Nifty is kind of an moving in, and still it's moving in a tighter fashion. Right? So we have an immediate resistance coming around 25,535 levels. But still, again, this balances keep on extending for quite some time, and we got a rejection from the balance. So this balance could be the rejection point somewhere around 25,535. It could see some sort of a rejection there, but then any cap on the upper side. So far, it is trying to defend the 27,700 levels. Multiple times, you also seen price was trying to enter above 27,600, but every time price was trading above that, price tried to fail to hold about 27,600, and finally it is trying to get a sort of a sell-off. But too much of trading activity was happened in this band, in a 500 point band and another 500 point band. Like, so approximately 500 point band is what the entire market movement is so far. and maybe that could maintain until the budget budget event is about to get over. Maybe once the event is over, we could get some clear direction over there. And so how we can approach Nifty here. So if you look into the extreme sentiment here, so here is the extreme sentiment setup in Nifty. So we are getting some extreme elongations in this band. So this band, we are getting some extreme elongations on the downside somewhere in this zone. So one of these kinds of zones can be used as a profit booking zones again when it is happening on the upper side as well. So this is the pink bars which shows the profit booking bands in the zones. And again, similarly, we are getting the day ended with an again one more set of profit booking band zones in the zones. So usually these kinds of extreme indications, right? So extreme indications happens with a short-term reversal. Once the event is over, once the extreme indications are over, it usually comes with a short-term reversals, right? So maybe a short-term reversal might be in place. Market could be trying to take somewhere around about 10,840, right? And when we could see some sort of a pullback again back to 10,780 levels again, we might see some highly volatile bands. Even at times it could go as good as 10,960 levels. So this is a kind of an setup I'm expecting somewhere around. The market are expected to trade around 10,980 or 940 levels, and the 10,840 will be the crucial resistance in upcoming zones. And most likely we are going to see the high volatilitiness in the markets very often in the markets. So until that budget announcement is going to get over, then comes the volatility crash, then the option price are going to get cheaper. Until then, the option pricing is going to be trading at a very high premium, and usually it involves high volatile swings, right? So, but intraday perspective, it might look like we are not moving anywhere, or we are just moved some 60 points higher or 80 points higher. But 1 or 2% here and there, we're not going to move much, right? That's the inputs we can gauge from that. And if you look into the open interest perspective, currently 11,000 option writers are defending right from the start of the series, and which is very crucial. Even if this is going to continue for the next series also, maybe the upper cap of 11,000 is going to maintain on EOD closing basis, right? And when looking into Bank Nifty will also expecting a similar setup over there. There is a short-term market ended with a short-term zones. You can see such zones are happening at these peaks here. So these peaks where you can expect some topping out patterns over there, again followed by momentum exertion happening on the downside, and again on the upper side, again on the downside, which is mostly the signs of sideways markets. So in a sideways market, but still it gives you short-term trading opportunity on the long side, and that could continue for the next 4 trading sessions, right? So that's the setup which we can see in this series. And currently, if you look into the macro perspective, right? So the pattern which you could see in Nifty futures here. Let me pull up Nifty futures here. The Nifty futures pattern. As I said, there is a tighter compression is going on. Similar pattern we can see it in gold sometime back in the daily time frame. Let me go and pull up daily time frame from TradingView, the gold chart. So let me pull up gold charts here. Maybe in a very short term, the trend could be bullish, but ideally the long term is the pattern which is forming on the hourly time frame is not a favorable one. So I went on looking for such kind of a tighter compression pattern, something like Nifty here. So what I got from the gold chart is something similar to that. So here is the gold daily time frame chart, and let me go back in the past and I'll show you. Right, so in gold, what you could see here is that there is a sequence of a higher low formation is there. It established a low during December 2016. It forms a higher low here. Again, one more higher low in next month, and it forms a substantial higher lows. Now the lows are getting closer and closer and closer and closer, which has been followed by a potential sell-off. Right, we are nearing that kind of scenarios. This is a similar pattern, not exactly similar, but the higher lows are getting crowded in this pattern. So it's a similar pattern which is running in Nifty futures. So caution could be taken here, that because an event could be a trigger. Something like a budget 2019 could be a trigger for a slow and steady downtrend, something like that. I'm not sure that the market will be always falling in the same way, right? But a trigger, if at all any trigger is supposed to come, it could come the post budget 2019 announcement, right? So that is one thing to take care about it. And again, the other major setups which are happening in the other markets, maybe I'll show you. I mean, the intermarket divergences are getting very much vulnerable here. The CNX mid cap was showing a tremendous divergence. At least if you look into that, it's underperforming terribly, right? So it's been going down for quite some time now, and after the peak has been established, now price has been closely trading at the month low of 2019, whereas Nifty is not. And if you look into the other small cap sectors, CNX, SML, or small cap, again the CNX small cap also showing similar divergences over here. And CNX Junior, Nifty Next, say like Nifty Next 50, right? So Nifty Junior. So again, Nifty Junior is also showing a drastic divergence over there. So the divergence is clearly visible, but the problem is that how long the divergence could continue. I'm expecting this divergence to continue for next 4 trading session at least, before any trigger to happen on the downside, right? So otherwise things are looking good. Only at least if you look into the other setups, like last week we had a Zeal. There was a panic crash coming in the last minute, right? So there was a Zeal panic crash came in, and which was a kind of an black swan event in Zeal, which almost crashed 30+%. And again, Dish TV, again, there was a similar crash witnessed in Dish TV as well. So these are the things which is not a good sentiment for the markets in a very short term, or even from the medium term perspective. I mean, definitely not a good sentiment for the mid cap sectors. And Zeal is, of course, from the Nifty 50 pack, and Dish TV from the CNX 500 pack. So the overall intermarket divergences are witnessed. Caution has to be taken care. If somebody is in long, or somebody is thinking about long, wait for the proper setup to go and look for the longs. Otherwise, the markets are getting riskier for holding longs around budget time. So maybe yes, short-term longs is fine, but looking through the overall sentiment, positional longs, carry forwarding longs looks risky, right? So it's always good to maintain intraday longs unless as long as the budget event is about to get announced. Once the event is announced, then if risk reward is favorable, then one should be thinking about initiating a positional shorts there, right? So thank you everyone, and thanks for your time. We'll catch up next week, same time. Thank you once again.